It is Friday, June 19th, 2020. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of CoinMetal. And, oh gosh, I don't even know how to announce this one, because, well, some changes have happened, and since our last show, as a matter of fact, I'm now formally no longer training with Northwest Martial Arts. They decided that we have a conflict of values, and that they would no longer like to have me as a student there. So these things happen. You know, we got to accept that not everybody is the same. Not everybody has the same perspective in the world, and you know, some of us have some shit to deal with that we're not entirely in control of. And, you know, for that, they have my greatest sympathies. You know, however, you know, hurt I may feel for as easy as I was to let go for them. Because, you know, I thought I was being a positive contribution to my gym, but apparently not positive enough. For them to disregard my personal character outside of the gym. So, you know, I do have to say, I find it very objectionable that a private business can look at my personal Facebook feed, not anything that I've been posting in the dojo feed, in my personal feed, and make such a decision based on that. Because, you know, unless somebody friends me on Facebook, or I friend somebody else on Facebook, I don't have, they don't have access to my personal feed. You know, unless, of course, I posted something on public. But the point being that I have my shit set to where you got to be a friend of mine before you see anything of mine. And so, you know, like I said, for them to judge me based on what they're seeing on my personal feed and making that decision based on that, it speaks of like McCarthyism to me. That they're afraid of the mere association with me. And that frightens me. That frightens me to no end. That somebody is looking through to see who their members are and make sure that all of their members are ideologically aligned with the politique that they're... I don't know. I don't know who's judging them or whatever that they've made that alteration in their values or whatever. I don't know. I don't know. It's not for me to decide, and it's not even really for me to judge, because like I said, it's not my business. It's theirs. But, you know, like I said, I wish them nothing but the best. You know, they gave me a great deal, and the lead instructor there is fantastic. If you can get in classes with them, you will learn a lot. And especially if you're interested in the Gracie side of jiu-jitsu, because they do teach it, and they do teach it very well. So, you know, hasta la vista, Northwest. I love you. But you know, apparently my jiu-jitsu journey had a fork in the road, and this is where I've had to go instead. So, and as far as the modification I've made in my own arrangements, I'm not entirely certain how much I can disclose at this point. And so, for the meantime, at least, I will be sparse, and to suggest that I was doing some rolling somewhere. But that's it. Cannot go any further than that. And it was fucking fantastic! I can't believe how much I missed it. Thank you for letting me in, and I will do my best to make it a positive decision. So yeah, I'm feeling really good. I did get my ass kicked quite a bit, and by a guy that had a great deal less experience than I did. So, as far as I'm concerned, that's a credit to the people that have trained him. So, anyway, let's go ahead and throw down with some music. And, I might be able to be a little more verbose about the situation a little later on, but for right now, girl's got to keep her secrets, And so, let's go ahead and throw down with some music. And we're going to go with body count, because that's just what we do. But I'm feeling a little bit of evil right now. Been kind of on edge until that rolling session was very good. That knocked quite a bit of the edge off, but I can still feel it in the back of my mind. It's still there talking to me. And so here it is. Body count. Necessary Evil. First Dance. Here on CoinMetal. And that was Death Clock with Burn the Earth. Yeah, man. Sometimes I feel like that's necessary. But then again, other times I think, well, if I burn it, then there's nothing left for me to live on. So, that's probably not a good idea. Anyways, as far as what we're going to get into today, it seems like you can't rinse out of one thing without going into another. But before you rinse out, you have to fully rinse out. And I think that the transition I've made personally is kind of a precursor to certain other changes that we can expect. Probably that the future will be a little more expensive, but contain a little bit more autonomy. So, there's a little bit of this, a little bit of that, I mean, you gotta have some bad with some good, right? Let me check something really quick here. See, I've been playing the fucking market, and I've been getting my ass kicked. I mean, I kicked a little bit of ass earlier on, but yeah, man, I'm taking a hit here and there. But that's, I think, a reflection of myself and my own state of mind. That because I've been in a transitionary period, and that I've been going through some personal issues, some interpersonal issues, and just facing those and seeing how it's affecting everything else in my life. I think that, like I said, I think this is a good way to go. I mean, I don't like it. You don't always like it, but I mean, I do like it in some of the changes, because I'll tell you, I felt very, very, very happy to just train with somebody, man. I mean, come on, it's been fucking forever, and and I gotta tell you, I've been kind of disappointed with something. I mean, I've got relatives that do jiu-jitsu, and they live within this area. But for whatever fucking reason, I couldn't get them to roll with me. And I don't know what to think about that. I mean, I don't know what to think about that. I just kind of confounds me that I have a rolling space here, but for whatever reason, I couldn't get them to come here. Anyway. So, as I was saying, changes. They're not always good at first. Or at least they don't always look like they're going to be good at first. But I happen to feel this one is going to be good in the longer term. Anyway, like I said, changes. We've got some changes going on out there in the economy. And, there's always been this perspective in crypto that for some reason I don't understand it really. There's always been this idea that somehow crypto is going to come along, there's going to be mass adoption, and then the US dollar would just go away. And see, I don't think that's how it's going to happen. Because the fact of the matter is that things like dollars, nickels, dimes, and cents, and pounds even, are actual weights They are weights of something in gold and or silver, depending on the base of the currency. And we've kind of bastardized that over time, and sometimes out of necessity. You know, it's like the circulation of silver coins as money in this country. For a while, it was looked down on, and they really pressed the gold standard as being the standard. Well, we debased it anyway. As shiny and as valuable as gold is to other people, we couldn't be honest, and so we debased it. And so now we're at IOUs issued by a private bank. However, they do marshal enough control out there that we do need to take them seriously as a currency and as an organization, and so we do. Now, to what extent we will in the future, I can't tell you, but I can tell you this. It'll probably be with a little bit less regard than we hold them in today. Now, the utility, though, of the US dollar will not go away. Physical notes are absolutely necessary in order for an economy to function. Period. And I don't care who says what about that. It's fucking fact. Anyway, I got this article here. It's on news.bitcoin.com, and this is by Kevin Helms. So yes, penis. Fed Chair Powell warns of unsustainable budget as U.S. national debt crosses $26 trillion. In his testimony before the Senate Banking Committee, Federal Reserve Chairman Jerome Powell warned Congress that the U.S. federal budget has been on an unsustainable path for years. I think a lot of us have been warning about that. He added that the U.S. economy is facing a deep downturn with, quote, significant uncertainty. Sorry, I had to take a sip. Unsustainable path. The Federal Reserve Chairman testified before the Senate Banking Committee on Tuesday. While acknowledging that the federal spending is giving the economy a short-term boost during the coronavirus pandemic, he warned Congress that the U.S. economy faces a deep downturn with, quote, significant uncertainty about the timing and strength of a recovery. Quote, the levels of output and employment remain far below their pre-pandemic levels, and significant uncertainty remains about the timing and strength of the recovery. Powell was quoted as saying, he suggested that investors should not overreact to surprisingly good economic data, such as the May retail sales report. The chairman elaborated, quote, the United States federal budget has been on an unsustainable path for years now. The debt is growing faster than the economy, so debt to GDP is rising. That is, by definition, unsustainable. The Congressional Budget Office said that the U.S. deficit soared to $19 trillion for the first 8 months of the fiscal year and is expected to hit a record $3.7 trillion this year. The current record for a fiscal year deficit is $1.41 trillion. It was set in 2009. Quote, every generation is entitled to spend what it wants to spend on the things it thinks it needs, but it really ought to pay for them in some sense rather than passing the bills on to their kids, Powell continued. Quote, over time, future generations, our kids and our grandkids, their tax dollars will be going to servicing the debt that we incurred to buy the stuff we wanted when we were in charge. While emphasizing that the U.S. has a lot of borrowing capacity, he said, quote, we need to get back on a sustainable path. He added that until the public is confident the COVID-19 disease has been contained, a, quote, full recovery is unlikely. Congress has recently authorized approximately $3 trillion in spending to respond to the COVID-19 pandemic, which includes the $2.2 trillion CARES Act President Trump signed into law in March. Meanwhile, the U.S. national debt also recently surpassed the $26 trillion mark. What do you think about Jerome Powell's warning? Let us know in the comments below. And let me see if there are comments on here. Sometimes there are. There's one. And this is by Imperius. Same age-old weapon. Who is issuing the damn notice? Debt with interest. The Fed at least is... the Fed, quote, at least is used to, now owned by the IMF/BIS/World Bank, which its shareholders are bloodline bankers. This is not about China/Russia/Al-Qaeda, but contracts and ink. Cut off the creditor, filled the office seats with the original Republic of the United States, away from the fraudulent incorporation of the District of Columbia, aka United States, owned and operated by the Crown and the Vatican, and issue true dollars without debt and without interest. Easy. Yeah, Imperius, I tend to agree with you, to some extent. However, see, what I think needs to happen is this. If we are going to have a transition to a non-debt related monetary unit, I believe the way to do it is this. See, all these monkey fuckers got no fucking confidence in cryptocurrency, right? That's okay. See, they've been wanting to do things as stable coins and baskets of stable coins. All the CBDC plans, all the stable coins. That's all they're fucking planning is fucking stable coins. Stable coins don't require people to mine them. You are literally exchanging a valueless token that's backed in some way, shape, or form, I guess, maybe, possibly, with a volume of U.S. cash, or U.S. dollars. And I don't think that's the case. See, I believe that's the trust point that we've been allowing these stable coins that we should not. If they're going to hold volumes of anything, if they are going to evaluate volumes of anything as something else, a token of something, it should be a volume of cryptocurrency that somebody had to fucking mine. Like Bitcoin, like Ethereum Classic, like Monero, like Litecoin, like Doge. See, I think the way that we should be doing the U.S. economy from now on, as far as the U.S. dollar is concerned, we keep the dollars in circulation. We keep circulating paper notes. They might not necessarily be the same paper notes that we currently have, because those, if you look very, very closely on the top of each fucking bill, it says Federal Reserve Note. Right? Federal Reserve Note. Okay, so the way to rejigger this bullshit to where it actually works, actually represents a value that was created by an individual such as yourself and was the product of their own volition, the best way to do it would be this: that you set up a framework for a token issuance. The U.S. Treasury would be in charge of the balances of each cryptocurrency that they accumulate. They're in charge of deciding whether they want to invest in Bitcoin, whether they want to invest U.S. dollars in Litecoin or Monero or any number of other cryptocurrencies that are out there. They are completely free to buy shitcoins. Yeah, ICOs. Yeah, who gives a fuck? I don't care. What I do care about is that whatever they invest in, whether they get wrecked or not, they have to document their record. And that record will be used to define who we put in the fucking seats next to determine what the basket of cryptocurrencies that the U.S. Treasury holds should be invested in. And this sum will be evaluated according to the market, and the market usually determines the price for things according to what it costs for them to make it. And I know this sounds kind of weird, but so imagine it. You got a basket. It's got some Bitcoin in it. It's got some Monero in it. And all of these currencies are open currencies that the U.S. Treasury is buying. They're just like you. Just fucking day trader, cryptocurrency day trader. All right? Instead of pissing money away on the Dow through their proxy at the Federal Reserve, they themselves, the U.S. Treasury, free to invest in cryptocurrencies as they choose. You, the individual, are free to decide how to dedicate your hashing power, should you have any. If you don't have any fucking hashing power, you don't have any fucking hashing power. But if you have a digital device, you potentially have hashing power for one of these networks. Just one. Even if it's just a repeating node. So like something on your cell phone that maybe once every minute or so it bounces a signal back to the network that you're on for whatever coin. And anyway, point being that instead of trying to invert it where we're using IOUs as the base for a token that is traded in turn for cryptocurrencies that somebody had to fucking mine, i.e. trading something that potentially has no value whatsoever, simply a documented association with a potential promise to pay, IOU. Instead of invert the script to where you are issuing a token against collateral that is exclusively the product of other people's work. So we turn the U.S. Treasury from the lender of last resort to the buyer of first resort. And this in turn does another thing. See, cryptocurrencies allow us to express things like our moral and ethical virtue. If we see that the way that we're wanting to mine our cryptocurrency is, not advantageous to people, we might try and alter the code to make it more advantageous to more people, thus ensuring that it will be adopted by more people. See, I think the old metrics of Bitcoin have been jiggered around to where it's meant to reward very, very large enterprise class miners to the disadvantage of everybody else. And it's left to the furry little monkeys to figure out ways to advantage themselves against these monoliths. And there are people that can do it out there. I know you're out there. But rather than having to rely on that we start accepting that cryptocurrencies that people are willing to support with their hardware are worthy of investment to some extent. But again, it's like all of the tools for the U.S. Treasury to determine what coins to put in its cryptocurrency wallet are freely available to everybody. Freely open to everybody. Everybody else gets to make the same decisions. There's no Federal Reserve in the middle saying what the price should be for everything. And we're going to go, if we were to do it that way, we would go back to what the market will bear, i.e. capitalism. And we can do it at light speed these days. There's really no reason not to. But like I said, instead of trying to balance it all on the trust we imbue in bankers, we assign bankers, we apply to bankers, we apply that to code that we run to create networks between one another that allow peer-to-peer exchanges. But I think that when we look at it in these terms, it would be better for the U.S. government to basically get out of things like regulating electricity and all that, with the exception of maybe like where we're seeing some issue with I don't know, maybe contract negotiation. Act as an intermediary, an impartial intermediary between parties. That's really what a government should be. The primary arbiter in a place where there's no other party that could be rendering an objective judgment. And that's what it's supposed to represent. But anyway, I think that over the long term, this is exactly where we're going to end up. Regardless of whatever regulatory frameworks are erected, the fact of the matter is that none of them are absolutely needed if you're running off of pure code and you're going off of pure peer-to-peer networks. We proved this. We proved this in 2010. And in 2000, I think it was either 2010 or 2011 when the pizza event happened. That was an official recognition of Bitcoin as valuated in U.S. dollars or any other fiat currency, from my understanding. I mean, it wasn't like Bitcoin wasn't being used on the darknet to buy and sell drugs, and there were unofficial exchange rates there. But in the open market, there were no exchange rates for Bitcoin before the pizza event, anyway. Anyway, I got some more stuff here. And the next one I got here, I want to make sure I'm going to the right one. I've got several. I thought this was kind of interesting. This is it's a little bit off of our track, but it's important to us because real estate, like cryptocurrency, has a real world associated cost, a meat space associated cost. You have to actually put skin in the game to acquire it. And this is on abc.net.au. Reserve Bank considered asking for real estate transaction pause amid property crash fears. And this is by business reporter Daniel Ziffer. Reserve Bank penis. Reserve Bank economists considered urging federal government to shut down the real estate industry, pausing sales of established homes to avoid perceptions of a coronavirus-inspired housing market crash. Documents from inside Australia's central bank, including many marked highly restricted, also suggest housing prices could slump up to 15%. Dude, that's a conservative estimate. The internal reports contradict a much rosier public view the Reserve Bank of Australia has been displaying about the billions of dollars and millions of jobs tied up in housing, construction, and real estate. Minutes of the board's May 5th meeting, released publicly, noted, quote, demand for both new and established housing and falling incomes. Confidence and population growth were, quote, expected to affect demand for new housing for an extended period of time. But inside the RBA, which sets key interest rates and economic direction, the warnings were clear and more severe. Quote, it's becoming clear that there has been a big drop-off in demand for new housing, said speaking notes for Assistant Governor Economic Lucy Ellis, which were obtained through the Freedom of Information request. Beyond difficulties inspecting and selling houses, people were worried about job security. They should be. Quote, contractors are being canceled. Early stage buyer interest is very weak, and the pipeline is emptying, it noted. Quote, anything that hadn't already been started has been deferred. A day earlier, there were more stern warnings in a COVID-19 liaison messages update. Quote, demand for new housing has declined substantially since mid-March and is expected to decrease further. It read, with, quote, sharp falls in sales, inquiries, and foot traffic, increases in contract cancellation rates. A sharp fall in housing prices is predicted in a note marked, quote, highly restricted, and created on April 18th. Quote, housing prices are expected to decline by around 7% over the next year. Prices are expected to remain around 10% lower than at February's statement over the forecast horizon, it read, putting most of this down to a loss of confidence because of COVID-19. The overall security of the banking sector and its ability to weather some mortgage failures will mitigate larger declines in prices caused by forced sales and financial stress. The fall in house prices could be as little as 2% in the best scenario. Quote, in the downside worst scenario, prices fall by 15%. Oh, dude, you people are being way too fucking conservative. I'd be looking at 27 to 45%. In April, economist Nick Garvin wrote to colleagues warning them the RBA should stop discussing the housing market as if it were operating normally and calling for a halt, as happens to stock market trading in emergencies. Quote, I think it's dangerous for regulators to be reporting on housing prices as though the market is currently functioning, he wrote. I'd suggest we classify the market as paused and treat the prices observed before the pause as the current prices, like how equity markets operate, but on a larger scale. The pause would not mean there was no activity, he wrote. Quote, although it could indeed be wise to recommend that the government temporarily halt all sales of established dwellings. Shutting down real estate sales would send a statement that, quote, we're in a different category of situation and that normal reporting of clearance rates and average prices was misleading. Even without shutting all sales, pausing reporting on the market would, quote, be a fair classification because real estate agents could not work normally. Quote, if people start mistakenly thinking we're experiencing a housing market crash, it's not going to help things, he added. Dude, but you are experiencing a real estate collapse. You can't fucking hide that shit. Bank may have prompted home builder scheme. Oh, really? It's fucking hilarious. The RBA reports on the deteriorating situation in construction may have influenced the announcement of the government's home builder program in early June. In an April report marked highly restricted, the Reserve Bank warned the industry was staring at a cliff. Quote, although some builders and developers have sufficient work for the next 4 to 6 months, the weakness in demand for new housing and the potential deterioration of financial conditions pose downside risks to further activity, it said. In Melbourne, some of the RBA's contracts have seen new home sales drop by half. By May, things were worse. Quote, builders of detached housing expect weak demand to weigh on construction activity and cash flow beyond the current pipeline, around 4 to 9 months. Builders and developers report that domestic banks and non-bank financiers have become more conservative in their lending. Dude, like they should have like 20 years ago. Quote, most firms intend to defer or cancel investment. Many firms have reduced staff hours worked more so than headcount, and an increasing number of firms expect to implement a wage freeze in the year ahead. SQM Research founder Louis Christopher said the documents showed the depth of the concern the bank held about the real estate market. and the huge number of workers employed in constructing new housing. Quote, Clearly, the RBA was very worried about the housing market at the beginning of April, he said. Quote, their concerns may have been the prompt the federal government to offer recent grants on new housing, as the steep falls in dwelling investment was their primary concern. The scheme was announced on June 3rd. Safe as houses? In May, Australia's largest bank warned that prices could fall 32% in a prolonged downturn. That's more like it. The Commonwealth Bank, which holds more Australian mortgages than any other, warned that, quote, under a worst-case scenario, house prices would fall by almost a third from their March 2020 peak over the next 3 years. You don't have that long a time scale, dude. CBA's chief executive Matt Comyn told ABC TV's Business the bank had a plan for the worst. Quote, we need to be prudent and consider a realistic downturn, but also plan for a worst-case scenario that would see a sustained increase of unemployment. House prices were lower in May, according to research firm CoreLogic, ahead of larger concerns with mortgage pausing, the temporary halt of payments, ending in September. National house prices fell an average of 0.4%, but there was a significant variation across regions. Payments on more than 1 in 14 mortgages in Australia are currently paused by major banks. The Australian Banking Association revealed repayments on 429,000 mortgages worth around $153.5 billion had been put on hold so far. Dude, these guys are so fucked. They're very, very fucked. And it is because they will not appropriately pursue their resources. I mean, they've got some of the most beautiful land in the entire world, and they want to build houses on it. It's fucking stupid. They don't have a really big population, and they're from what I can tell from this, their economy is declining. It is in decline. And you know, I would be willing to bet it's a great deal of this overregulation. You know, if they were to get the fuck off of the Australian people's necks, that a lot of things would happen to help them. You know, I think that they're swarthy people. They really are. And I mean, if you know anybody from the Australia or even New Zealand, Tasmania area of the planet, like I said, they're very swarthy people, you know. And I think that a lot of the culture adjustment that we've been going through over the last probably like 20-30 years to a more digital era, I think that one of the problems that we're facing is that we don't know how to properly value what we're doing online. You know, a lot of us produce content that is copied by algorithms and shared, or you know, our memetics, our format, or even our wording. You know, if we have any call phrases or whatever, all that shit's copied by the bigs, and they're trying to retain some sort of relevance. But you know what? When I'm watching the news and I'm seeing somebody sitting in their fucking living room, like anybody that makes YouTube videos, I now value them as much as I do somebody making YouTube videos for free. Their opinion is now on par with that person because their production is now on par with that person. They're underutilizing their available resources, and they're not really reporting on the news. You know, I get more news out of people running around with fucking cell phones than I do off of the fucking television. And it really shouldn't be that way. But it is. You know, I mean, if we were to really be pursuing journalism, we'd be using things like fucking CCTV camera feeds and shit like that to be, you know, finding things to report on. But they aren't. And it's because we've aligned the idea of surveillance to be something that is purely for the monetization and utilization by a limited class of people. And this, again, is a problem. It's because the responsibility for watching those cameras is a limited scope of people. The eyes, you know, the values behind those eyes, the ethics behind those eyes, the morals behind those eyes are limited to the people that are watching it, and not representative of the entire community for which they're supposedly policing. You know, and algorithms can account for a lot, and they can help you account for a lot, but they don't make reality. They can make something that looks like reality, but if you were to ask the people that are fulfilling on the tasks, you know, they're hungry, they're thirsty, they need to go to the bathroom, you know, their wife left them, their parent died, you know, there's a lot of things that those algorithms aren't picking up that would be contributing factors if we were to understand exactly what sacrifice was being made for somebody to be at work. And it is a sacrifice. Every time you leave your house to go work someplace for however long it is, you are sacrificing hours of your life, resources that you accumulated through your labor, to the investment of somebody else's benefit initially, and then your benefit as a product. But if you're not benefiting enough for that sacrifice, what is the point of you doing it? And, you know, anyway, that's really where I want to leave it. Let's go ahead and throw back down with some music. I want to play some fucking Static X. And you know what song I really love? Here it is. Static X, Down. Here on CoinMetal. And that was Fear Factory with Regenerate. And so, where are we going to go next? I had this article all picked out. Where's yeah, we covered that one. Ah, here we go. And you know, I've said on the show, we covered this on the show, that the Federal Reserve basically has their own internal trading desk where they're trading on the directly on the floor of the Dow. And I'm not sure if they're on other markets to at that level, but I would only assume so. And so I got this thing here. It's on Zero Hedge. So, you know, of course, consider the source. However, in whatever regard you hold Zero Hedge, I happen to like them a little bit. Anyway, so here it is. The Fed's casino is in flames, but please continue gambling. This is by Tyler Durden. Oh, wait a minute. Oh, it's a fucking aggregated article. So we're going to go to the source. But it's of the same title. So, you know, we can be cool with that. But anyway, this is authored by Charles Hugh Smith. So yes, penis. Here's the thing about gambling. Risk cannot be made to disappear. It can only be transferred to others. Those taking seats at the gambling tables in the Federal Reserve's casino believe they can't lose. Or, more precisely, any losses they suffer will quickly be made good by the House, i.e. the Fed, which can digitally print as much currency as needed to restore the order to the gambling. The punters crowding around the tables have forgotten that gambling is inherently risky. The Fed can digitally print currency, but it can't force punters to pay or to play. Unfortunately for all the punters crowding around the tables, the casino is on fire. The Fed's rigged games are in flames, and head tout/fixer Jay Powell is telling all the nervous gamblers who smell smoke to please stay at the tables and continue gambling. The fire is under control. But of course, it's not under control. It's raging out of control, and to maintain the illusion of control, the Fed is buying chips in its own games, buying junk bond funds and corporate bonds. The Fed's casino has operated on a single principle. The Fed digitally prints trillions of dollars and hands the dough to broker-dealers in exchange for treasury bonds, mortgage-backed securities, and now junk bond funds and corporate bonds. The new currency flowed into financial assets as banks, corporations, and financiers borrowed money, leveraged it up, and bought back their own shares or bought stocks. What the punters don't understand is this mechanism isn't guaranteed. The players getting the freshly created dough don't have to buy stocks or junk bonds. They only do so when they are confident that there are plenty of greater fools at the tables to buy these assets at higher prices. The pool of greater fools is drying up, and so the Fed has been forced to start buying its own gambling chips directly. This is an act of complete desperation. Yet the punters at the table who smell the smoke don't yet realize the fire is out of control, and the entire casino will be soon engulfed in flames. Here's the thing about gambling. Risk cannot be made to disappear. It can only be transferred to others. The absence of risk in the Fed's casino is an illusion. The Fed's casino has transferred all of the well-hidden risk to the entire financial system, which is now in danger as the Fed's burning casino triggers a conflagration few even imagine and virtually none think is possible. So, by all means, believe the soothing words of the head tout/fixer Jay Powell if you want, but realize that words and digitally printed currency won't make the risk disappear. Rather, they only increase the risk of the fire spreading to the entire financial system. Yeah, that's kind of a sobering perspective. And he puts it in really stark terms, but the thing is this. He, just like the rest of us, is interpreting signals that we can see on the surface only. And see, one thing about the Fed and their investment patterns is this, that they are advised by the warnings and the issuances of all of the regulatory entities out there. They have networks where this information can be accessed. Of course, it doesn't stop them from making mistakes. Because the fact of the matter is that they are operating on signals that are given to them by their accredited traders and shit out there, the people that are certified to be able to determine whether or not something is good or bad as far as an investment is concerned. It's been completely kind of corrupted. And this was something that was revealed in the 2008-2009 financial crisis, is that the scoring agencies were scoring stocks that should not have even been F- as AAA rated. And this is providing false signals to the rest of the economy, the Fed included. And so, the Fed has these signals to rely on. And that's one of the reasons why I suggest that either the Federal Reserve or the U.S. Treasury issue a currency that is backed solely by cryptocurrencies that are mined by the public. Not fucking tokens, not stable coins, fucking proof of work currencies. Shit that people had to dedicate their hard-earned money to the hardware, electricity, and bandwidth that coin was a part of, based on their confidence, based on their metrics of quality. This is the way to cancel out this all of this miscommunication. Of course, it's not going to change in that people will be able to misallocate their funds based on their perceptions. But it will be their perceptions. It won't be the 13 fucking layers of certified agencies between the Federal Reserve and the guy on the ground. Because the guy on the ground is the miner. He's the live node. He's got a copy of the fucking blockchain that is publicly available to access and check at any time. Did my transaction go through? Did I get my confirmation? And because of that, it provides us with a direct communication to the market. The market's confidence, the market's desires, the market's use cases, the actual fucking use cases that people are putting these currencies to. Freely, publicly available. But what you have to do because of this is get off the fucking idea of trying to monitor it and tax it at every conceivable point. Because that is possible. But what it's going to do is it's going to force all of the legitimate business onto currencies and networks that don't have any connection to the Fed, don't have any desire to have any connection to the Fed, aren't even available on exchanges for exchange for fiat or even cryptocurrencies. This is the kind of situation we are in right now, that a significant portion of the economy could opt to go to a different currency or a plethora of different currencies solely to get into business and or stay in business. Because I'll tell you something, demand didn't go fucking away. Demand is unending. Resources are between the ears. Imagination is infinite. So there is no reason why there should be any desperation out there. There is no reason there should be any lack of supply out there. Because there's plenty of people that are willing to do shit just for a little bit above fucking break even. Because they're just happy to contribute to their community and its well-being. But the thing is that we're not basing this shit on choice. On their choices, anyway. We're basing this shit on the choices of frameworks that are drawn up by the creditors, by the financiers. These are the conditions that they are willing to go by. And you know what? That is their right. But the problem is too much of the economy has been placed in their hands to dictate the terms of. And this has disenfranchised significant, vast swaths of the economy in a multitude of ways that are not expressed in the monetary systems that we have, the fiat monetary systems that we have. There are values that we hold in our hearts and our minds that are not represented by the allocation of those notes. This is what creates the disparity. This is what creates the drought. This is what creates the starvation, the poverty, the hatred, the greed, the coveting of others. And to avoid acknowledging that now, in the 21st century, when we have these metrics plainly available, plainly visible to the public, is at our own peril. Literally, I think, anyway. Anyway, I got this next article here, and this is an example of what I'm talking about with regard to trying to use the metrics of legacy markets and legacy frameworks and force them onto crypto. As many of you are probably aware, the Ethereum network, or at least the Ethereum developers, have been trying to pressure the Ethereum network to convert from a proof-of-work network to a proof-of-stake network. And the problem with this is that when we sign on and we do decide to download the code and install it, we have certain individual values. We have things that we value about these coins. We have principles. We have traits that we want our coins to have. When you decide in what hardware you want to purchase, you consider first which coins you may potentially mine with it. You're going to buy different hardware to mine a proof-of-stake currency versus a proof-of-work currency. This is your monetary investment into the maintenance of one of these coins and one of these networks. It's a very, very important decision that you're going to make. So, when the developers say to you, now that you've purchased all kinds of hardware for mining a proof-of-work currency, hey, yo, we don't like proof-of-work anymore. We want to turn over to proof-of-stake because it gives us some attributes and some things that we really want, and we can't get off the proof-of-work network. So y'all are going to have to buy proof-of-stake hardware and set that up instead of whatever you got going right now. Are you fucking kidding me? Are you fucking kidding me? It's like you're in a 747 flying from Los Angeles to New York, and halfway through the flight, somebody calls the pilot and says, all right, we want to change from jet engines to props, and we want you to do it now. And we want you to sustain flight while you're doing it. Are you fucking kidding me? It's the same thing. And so, trying to push the network to that kind of a transition through pressure, coercion, we're not going to develop for proof of work anymore, whatever, all it's going to do is cause more miners to go over to Ethereum Classic. And so I got this article here. It's by Samuel Hague, and it's on Cointelegraph.news. Cointelegraph.com. My apologies there. Samuel Hague, so yes, penis. 6 crypto heavyweights join Ethereum 2.0 staking trial. CoinCensus has announced that 6 top crypto firms will receive early access to its Ethereum 2.0 staking platform. On June 17th, CoinCensus tweeted that cryptocurrency exchanges Binance and Crypto.com, digital asset custody providers Trustology, Matrixport, and Huobi Wallet, and investment firm Dharma, which sounds a lot like DARPA, Capital, would receive early access to an Ethereum 2.0 staking pilot through its Thorough? Dude, Thorough. That's the wrong word for there. It's through its decentralized finance Codify platform. Increased excitement for Ethereum 2.0. The move comes amid increasing excitement for the long-awaited Ethereum 2.0, which will integrate proof-of-stake consensus mechanism into Ethereum. The rollout will see a network of validators receive fees in exchange for securing the Ethereum network. Validators are required to lock up a minimum of 32 Ether. Jim Slazaz, chief executive of Dharma Capital, described Ethereum's proof-of-stake upgrade as, quote, a pivotal moment for both Ethereum and the Web 3.0 ecosystem. Whatever Web 3.0 is. Demand grows for Ethereum 2.0 staking services, not mining. A number of third-party staking solutions are emerging as some prospective stakers are willing to give up a portion of their rewards in exchange for custody and management services. Others simply don't have 32 Ethereum to stake. Quote, some of the risks associated with running your own validator include theft or loss of withdrawal keys, incorrect transfer of funds to the Ethereum 2.0 deposit contract, and not to mention hardware or internet connectivity failures, which result in a loss of validator rewards, said Codifier staking product lead Tim Lowe. Quote, with consensus Codify validator keys are held in a secure vault with online signing capability, and There will be multiple layers of gatekeepers validating transactions, preventing unauthorized usage, he added. Enthusiasm for staking services has also manifested in the form of an explosive price rally for Ripple, or RPL, the token underpinning Rocket Pool, an Ethereum 2.0 staking pool targeting investors holding less than 32 Ether. From mid-March until mid-May, RPL gained over 950% from roughly 30 cents to all-time highs of $3.20. RPL has since retraced to $1.90. Ethereum 2.0 faces delays. Despite the anticipation, Ethereum 2.0's rollout has seen persistent delays. A year ago, the Ethereum Foundation's Justin Drake was aiming for a genesis date of June 3rd, 2020. Actually, that was actually a date that resulted from, I think, at least 2 other pushbacks. Continuing. That was then pushed to mid-2020. Speaking to Cointelegraph, consensus developer John Wolpert stated that he was, quote, very impressed with the maturity of the Ethereum core dev guys for standing their ground and refusing to, quote, sell the soup until it's soup, despite complaints from the community regarding the delays. Let me click on delays because they've got that underlined. Oh, this goes back to a tweet. And it says, the continued wait for Ethereum transition to POS reminds me of this passage from blah, 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 the Black Swan. And I'm not going to read it all. So yeah, Ethereum 2.0, I don't know that it's going to actually materialize, at least not as expected. I think that, again, maybe these other entities coming into the Ethereum network, if they're actually doing the proof of staking themselves, they might actually be able to achieve a consensus and fork the network. But what they're going to end up doing is creating another Ethereum, because all of the proof of work miners that just kept doing what they were doing are going to be enough to sustain a proof of work network. And all of the users that had no desire to change over to a proof of stake network are going to stay on that proof of work network. And so you're going to end up with yet another fork of Ethereum, if in fact that's the way that they go about it. And I mean, come on now. We've seen this multiple times. Most recently, we've seen it with Steam, where Justin Son, my apologies, with Tron, he basically bought up all kinds of Steam, and then he was having exchanges exercise the Steam that other people had on there, exercising the voting rights of their Steam without their consent, I might add. But they exercised their voting rights in favor of Justin Sun basically buying the Steam network. And he immediately started doing things on the Steam network that pissed a lot of people off. And so they forked it and they created Hive. This is not a new event. This has happened before. This is going to continue to happen until people stop fucking with us. Use it as currency. Quit trying to fuck with the networks. Get over yourself. Anyway, let's go ahead and throw back down with some music. And where are we going to go? I haven't actually picked anything out. I think this one's appropriate because, it's like these guys are making all these plans, and they're making plans on things to do with your hardware and your bandwidth and your electricity, meaning they want to build on top of the proof of work, or in this case proof of stake, that you're doing. But what they don't understand is that you, the miner, can decide at any time, you know what? Fuck this shit. And before you know it, there's not enough hashing power on whatever network they have to sustain the needs of the network. And they're going to start having fuck-ups. People will start attacking it. and it'll collapse. We've seen it before. Anyway, let's go ahead and throw down with some music. And so here it is. Faith No More. Surprise, You're Dead. And that was Slipknot with The Shape. And it is with that I'd like to close out this episode. Thank you very much for listening. I certainly do appreciate the support. We will be back again on Monday at 8 p.m. Pacific Standard Time. And so until then, I want y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. And so as far as our last dance is concerned, I haven't actually picked anything out yet. But I'm looking, alright? And, I don't know, I'm feeling the need for a little bit of Anthrax. And, let me see if I can find it. Here it is. Fight 'em till you can't. Last Dance. Here on CoinMetal. Thank you again for listening, and y'all have an excellent weekend. Good night.